If you've contributed to your RRSP this year, there's a tax rule you probably haven't heard about. Canada gives you a $2,000 lifetime cushion above your deduction limit. Past that, even by $1, the CRA starts charging you 1% per month, every month, until you pull the excess out. The frustrating part, CRA. My account only shows your room. It doesn't show your contribution history across accounts. So most people don't find out until CRA sends a bill, and by then the penalty has been compounding for months. Here's how the rule actually works, and the cleanup checklist if you're already over. If you're 18 or older, you get a $2,000 lifetime cushion above your RRSP deduction limit. It isn't a deduction. Money inside the buffer doesn't reduce your taxes. It just sits there, growing tax-deferred without triggering the penalty. And it's lifetime, not annual. The same $2,000 of headroom follows you year over year. One catch, it's shared across every RRSP you have, not per account. So $1,500 above room at one bank, plus a forgotten $1,500 spousal at another, and you're already $1,000 past the buffer. Past the $2,000 buffer, the CRA charges 1% per month under Part X.1 of the Income Tax Act. On the highest excess in the month, not the average. So depositing on day 1 and withdrawing on day 30 still costs you a full month of penalty. A $5,000 overcontribution that sits for a year, $360 in tax. And the clock starts the day the excess lands in the plan, not the day CRA notices it. When the penalty applies, you don't add it to your regular tax return. You file Form T10VP within 90 days of the calendar year end. That's March 31st if your tax year is calendar. The form is short. List each month's highest excess amount, multiply by 1%, total the year, pay the tax with the form. Miss the deadline and CRA adds late filing penalty plus interest on top of the 1% per month tax that's already been accruing. And if you owe for multiple prior years, you file a separate T1 OVP for each year. CRA doesn't let you bundle them. 2 CRA forms cover the cleanup, and the right one depends on timing. What? If you catch the overcontribution before withdrawing, file Form T3012A. It asks CRA to certify in advance that the withdrawal is an excess refund and shouldn't have withholding tax taken off. Send it in, wait for the certified copy, take it to your RRSP issuer, and the refund comes out clean. If your institution already withheld tax on the withdrawal, that's where T746 comes in. You claim a deduction in the year of withdrawal, which effectively reverses the income inclusion the withholding triggered. The withheld tax flows through your T1 in the normal way. The faster path is T3012A. The cleanup path is T746. Either way, the goal is the same: stop the 1% per month penalty from running. Sometimes the overcontribution wasn't really your fault. Subsection 204.1(4) of the Income Tax Act gives CRA discretion to waive the Part X.1 tax if the excess was a reasonable error and you took prompt steps to withdraw it. Reasonable error means honest mistakes, misreading your room, an employer's group RRSP contribution that pushed you over without notice, paperwork from 2 institutions that didn't add up the way you expected. It doesn't cover deliberate over-contributions. You write a letter to CRA, explain what happened, attach proof of the withdrawal, ask for the relief. The waiver isn't automatic, it's discretionary, but the request lands much better when it arrives before CRA's assessment notice does. If you're worried you might already be over, DM us the keyword RRSP. We'll send back a checklist that helps you diagnose where you stand and the cleanest way to fix it. Whether that's the T3012A, the T746, or the S204.1 waiver letter.